Hello everybody, and in today's daily video we are going to be charting XLK, which is State Street Technology Select Sector ETF. It's basically ETF of tech stocks, and one of them, and this one I was able to find some very valuable lines, intersections, so pay attention. So first of all, if you chart, so we are on regular, this is going to be a whole of a difference if we are on logarithmic scale or on regular. Right now we are on regular. If you chart the 2022 bear market on Fib, you're going to discover that after the 1.618 we already slowed down, okay, and then we basically peaked exactly. This was the superb hits of 2.0 extension. That was the Q1 this year, and then we had a crash, which was the return to the previous all-time high. Okay. Now, when you do the same for a Q1 crash, guess what's going to happen? We are already past the 1.618. And we are already slowing down, just like we were in second half of 2024. And what is going to happen, in my opinion, likely that in Q1 this year, we are going to hit exactly this 2.1 extension, which is for XLK, which is 1.57, and that's where I'm gonna be also liquidating basically most of my stocks, and I will be done liquidating my crypto by then. I believe it's going to happen in Q1 next year. And then what's going to happen after that, in my opinion, most likely that we are going to come back. So let me draw this. We are going to come back to the previous all-time high, which is the Q1 of this year all-time high, and that's 121. So what is it going to be? What decline is this going to be? 22%. What decline was it this in Q1? It was 29%. So it's going to be lesser, smaller crash, smaller decline, smaller correction than we saw this year. And that's what we are going to see most likely next year. And based on the seasonality and also confluence of other, excuse me, excuse my voice, I'm a little bit sick these days. And with the confluence of the other points of view and work of other people also, talking about liquidity, presidential cycle, like all in all combined together, it's going to be most likely happening throughout Q2 and Q3 of the next year. It's not going to be this fast as it was this year. That's where the bulls will be wrong, because the bulls will probably be expecting a V-shaped recovery, and they're gonna be wrong. And the last thing that I want to show you, I'm already stretching this video past 2 minutes. Now we are on monthly, guys. We are on monthly, and this is basically the past 26, 27 years, basically as long as this ETF is alive. And just have a look how it crashed in the dot-com bust. Holy! Anyway, and I found this parallel channel on monthly. Definitely this bottom part of this parallel channel we hit so many times over the past like 10-20 years. And we spent ever since 2008, we spent most of the time in the second half of this channel. Just have a look, like I'm sorry. So like this first 10 years, we spent only in the bottom part of this channel. Then we hit the top of the channel, we hit it in 2021, and then we hit straight the bottom of the channel, and we hit the bottom of the channel again in this Q1. I think we are also due to hit the top of the channel. And remember, this is logarithmic, guys. This is logarithmic. So any few space in this scale is much more in a real terms. Okay, so if we do go, I do not think we are hitting this next. I do think we are gonna do exactly what I told you. We are gonna go to 157, then we're gonna come back to 121, and then we are going to go, I think, and we are going to hit the whole top of the channel. And in 2027, in the year 2027, if that's going to be in 2027, it's going to be around 200, okay? And that, I think, is going to be serious profit take. So the next year, if we are good enough to invest into XLK around 121, okay, mark this down into your calendars, make lines on your chart. If we are going to hit that and we are good enough to deploy, then I think that we are going to be potentially able to make approximately, or maybe even over that. It really depends on when this top of the channel is gonna be hit, but 60% maybe on average, 60%, 50 to 70%. So we are going to be able to make 50 to 70% on this ETF. And that I want to conclude with, because this is very valuable finding.